So when you're in front of an anomaly, I think basically human reaction is a little bit like Marmite, I guess. So you kind of either love it or hate it. And that's exactly what the general response that I get like this, oh my God, you're like a purple squirrel. Come and I love you. They hug you.
Let's take a selfie.
And
for our Aussie viewers, she meant Vegemite.
Exactly.
Hi, everyone, and welcome to the 60/40 podcast, the only podcast that deep dives Asia's tech and business headlines from the leaders actually driving the change. I'm also so excited because for the first time ever, we actually have everybody in the studio. So we do
Big win.
introductions. My co-host Peter Bithos and Prashant Ranganathan. Yay! As well as our special guest, Sam Ghiatti,
Hi, everyone.
the founder and CEO of Habito. So we have a lot of great things to talk about today. We're going to do an exploration of Japan's fintech scene with Sam. We'll also do some hot takes around the latest Shopify AI memo, Grab's financial results, and the update on Aspire, which is a local fintech based in Singapore, who announced that they're pulling out of the Indonesia market. Before I begin, I should again remind everyone that none of us are professional journalists or investment advisors, so everything expressed on the show is for informational and entertainment purposes only. All right, guys, before we jump in on Japan's fintech scene, what in the news is keeping you entertained today or interested? You just came back from KL.
I just came back from KL.
And?
Xi Jinping is there. I decided to come back last night because he's leaving apparently this afternoon. My advice to anyone is don't go to KLIA when the premier president of China is in Kuala Lumpur. Never a good thing. So.
But you didn't see him.
No, he didn't.
Yeah.
If you haven't heard, tech bros are not in the circle.
No, they're on their way back. Remember, Jack Ma is back.
I know.
Jack's
I
back.
did get my invite, but
Yeah, you declined.
I was a bit nervous.
But you saw the sign.
I definitely saw the sign. There were signs. There were lots of signs, right? So welcome. No, they didn't say welcome Peter, strangely enough.
Yeah.
Welcome.
Do you think this trip was scheduled before or after the tariffs? Do you think he's trying to shore up allies?
I got money.
in
It's
Asia?
after. I got
Oh,
money.
yeah?
It's after.
So he's on a...
I was in KL yesterday as well.
What?
On the way back to the airport. We might have been on
Glad
the
you
same
didn't
time.
leave today, because that's why I moved my flight to yesterday, right?
Oh
So-
my God. Yeah, it was very, very, very
Well,
You
know
were
what's really
meeting
funny?
Xi, right?
Okay.
Okay.
Right.
First off, Sam, Japan, which is where you are currently spending most of your working time and
My new
waking
home.
time. Yeah, exactly. Japan's many things. It's the land of the rising sun. It's a global economic powerhouse. It is a Singaporean's favorite place to visit. But what has traditionally not been is very fintech friendly and very startup friendly. But of course, all that is changing. You are a poster child of that. You launched Habito back in 2023. You've been working on it for a few years. Habito is a digital bank that offers saving accounts, financial advice, and other tools for the Japanese market. Did I do it right?
Read your memos.
And when I think of Sam or see Sam, she seems like the prototypical Japanese founder.
Obviously.
Absolutely.
She's like the perfect fit.
Yeah.
Sam,
which part-
ponytail at the right height.
Which part of your family tree is Japanese?
Yeah, I never have to show my face. And as long as I go Samsan, people say, oh, okay, and we know what we're in for. Yeah, that's right. But yeah, so, Japan is a difficult place to do business as an entrepreneur, as a foreign entrepreneur, as a woman. I'm sure we'll talk a bit more about that. But as a fintech ecosystem is definitely what I would categorize as an emerging fintech ecosystem. It's what basically Europe looked like maybe 10 or 15 years ago. So if you think about Japan, it's the fourth largest economy on the planet, 120 million people, and we still only have about 150, 200 fintech startups in the entire ecosystem. I mean including, the Rakuten, the Lines, the Money Forward, so across all stages. So the comparison here is Estonia. For those that don't know, Estonia is a very, very small European market. There are more fintechs in Estonia than in Japan, right? So there is enormous potential if you look at
Jakarta.
Definitely. in a neighborhood of Jakarta, most likely. But there are opportunities across many sectors, from digital payments, corporate payments in particular, saving investments and insurance, which is really where we play, risk management. There's a lot going on in sort of trading. So I think the space is wide open for new, bright entrepreneurs that are willing to take the bait and deep dive.
Which presumably is what you did.
In a way, yeah.
And maybe you can talk a bit about the specific numbers that you're seeing in the Japanese market that made you, so confident that a product like Habito would work.
I'm still sort of trying to sort of figure out exactly what are the numbers and make a bit of
there was,
work.
like,
But
really
Now
low
that
savings
now that the
account.
investment is in, you're figuring out how to make the numbers
now
work.
that it's all closed.
Yeah.
No, the reality is that Japan is a really difficult market, right? Everybody,
Yeah.
when I don't know what you guys think, but people say Japan is beautiful. It's a really great place to go and visit as a tourist, but actually doing business in Japan is incredibly hard. The language
It's a
barrier is
closed
enormous.
ecosystem.
Exactly.
Yeah.
Closeness is probably like the single biggest sort of attribute and the most frequently used attribute when people talk about Japan. And this is whether you're an investor, whether you're a corporate player, whether you're an entrepreneur. Everything is a little bit harder than elsewhere.
Yeah.
And it is because Japan corporation dominate the space, and the Japan generally macro environment has been a very, very difficult one.
Yeah.
Whether you're an entrepreneur or not, right?
Yeah.
So, I mean, anecdotally, but when we entered the market 2022, so we obviously did rounds of sort of market research. But can you guess the percentage of adult people in full-time employment that did not know what inflation was? Never heard of that word. Percentage of adult population.
Never heard of the word. I don't know.
Inflation.
I feel like it's got to be
The English
Yeah.
word or the Japanese
Yeah.
word? Or both.
Yeah.
30%.
Okay, you read my name.
Third,
It's 30%.
That's
30%.
wild.
That's a
it's
lot.
it's
It's
It's never
wild.
occurred to them.
Well,
just
you
like,
know, in
that
the
is wild.
Didn't.
past 30 years, if you think about it, no growth,
Yeah.
low
right.
yield,
Right.
no inflation. So,
Why would
there
you
was,
need to know
why
that?
would you
that
need
would
to
be
know
the
that?
single concept that every single American agrees upon.
Yeah, right.
That's
Yeah.
right. So, but also what I think most people don't know about Japan is in the last 30 years, at the same time span, people never heard of the word inflation, never earned anything in their bank accounts, was always zero. Japan has always been the largest world creditor.
Yes.
Number one for 30 years in a row, always number one, because Japan is basically sitting on a gigantic stash of cash, whether it's corporate cash or whether it's retail cash, right? So basically people put a lot of savings at the bottom of zero yielding bank account. And that is how Japanese build their wealth. They also have a preference for all things that protect downsides, which is why insurance is such a big vertical. Some of the largest life insurance businesses in the world are Japanese. Here's another
Yeah.
Yeah.
So
question.
those are amazing stats on the untapped potential, if you want to think about it that way. But what was your thinking on timing? Like, why now? Like, it's been that way for 30 years. What is your belief on what is changing?
Yeah, I mean, when the hypothesis as far as Habito is concerned specifically is that we tap into really well established, I would say, national psyche characteristics of consumer behavior when it comes to finance. So savings and protection, which is why we acquire customers on a savings product and then we convert them into life insurance product. That's a kernel, the basics of what we're doing. But what's changing is probably two things. One is digital payments. Some people, last time I went to Japan was probably 2015, 16, and then again in 2022, and just the number of people that accepted cards, even like taxi drivers,
Yeah.
right? So anyone that hasn't been in Japan for a sustained period of time and then went back in, I would say over the last 3 years, they definitely saw the difference because digital payments are now accepted everywhere.
Yeah.
Digital payments, big opportunity. Although already largely dominated by incumbents, Line Pay and Rakuten and so forth. And the other is that finally, because the macro environment has changed, then people are really starting to move very slowly, but they are starting to move some of their savings into investments. And so probably the best marketed word in finance that I've ever seen is NISA, the National Individual Savings Accounts, which obviously exists everywhere else, and it's been marketed for a few years, and now people are really starting to use it. So those are the two things that are, I think, driving us, certainly from a consumer perspective, sort of some of the changes that we're seeing in fintech. There's obviously other things going on broadly in sort of corporate payments, in crypto, but those are the ones that are sort of particularly relevant for a business like us.
It's so good to hear that, because back in 2013 I was at PayPal, and I think Masa and David Marcus at the time, over a game of golf, had decided that PayPal could really help SoftBank in a JV and launch what's called PayPal Here. Remember that little triangle that they launched? It was like a square device, but it was a little triangle instead. And they decided this over a golf game, and they said, okay, Prashant, go figure it out. So it was a three-way partnership between PayPal.
You got 24 hours to do that.
Yeah. Three-way partnership between PayPal, Yahoo, which was I think SoftBank's biggest investment at the time. Yahoo Japan was huge,
It was huge.
and SoftBank. So SoftBank had all the retail presence and the
and
customer
Prashant.
trust, and of course the four-way partnership. But I at that point realized it is so hard to navigate the Japanese corporate kind of JV thinking, because I would walk out of a meeting thinking, yes, we won that deal. They were nodding, there was a lot of grunting, and the guy who would come in with me would be like, dude, they did not get anything you just said. And the louder the grunts, the more they disagreed with you with a nod that went along. And I was like, wow, I just brought the whole team. And I would send off the email back to San Jose saying, yeah, we won this. And so it was a lot of hard work, like 2 steps in and 3 steps back. So kudos to you. It didn't work out. It didn't work out. 2 years. And then I basically wrote the memo saying, hey, I'm out. You guys should get out too. And we did. It was like 1.5 years of really
then
painful.
PayPal obviously acquired Payday, right?
Yeah.
7 years later.
And
BNPL.
that's another different way to kind of play this. But the JV construct, which is preferred, didn't work out. How are you navigating this? Like, how are the grunts and the nods kind of, how are you reading it, interpreting it, and
Like
then
the work cultures.
how do you understand it?
Slowly, I would say. I mean, the good thing is that Japanese have one thing that works in their favor, which is patience.
Yeah.
Right? So you're not expected to work out things fast.
Yeah.
And so for a player like me that doesn't speak Japanese, and so I had to obviously build the entire team from scratch, and so figure out how you do that, and what is the human middleware that you need to put into action to kind of become relevant in
Of course, as
discussions
an
with
Italian, patience
Church.
comes
Yeah,
naturally.
absolutely.
Yes.
It's my biggest virtue. Patience. Ask my team and say, okay,
The prototypical Japanese founder. Come on.
Absolutely. There's certainly many things that I've learned along the way, and one is certainly trying to understand how Japanese decline an offer, which is really, whether it's like an offer of investment, whether it's working with you, partnership, collaboration, whatever it is, right? So they either bow very deeply and low, and that's a sign of sort of deep respects and their recognition that it's not working out, I'm sorry, okay? And so they bow out, very politely, but it's basically polite. The other, which actually I didn't know what it was to begin with, but now I'm looking for it. Every meeting, like, is anyone doing this? And it's like the sucking of the teeth.
Oh.
So right? So when you hear that, it's like not a good
When my mother didn't
signal.
like something.
Yeah,
it's
like-
The sucking of it is not a good.
Oh
not a
man,
good
these
signal.
cultural nuances, they make all the difference. So yeah.
Yeah, that's right.
Wild.
And
No grunting?
And the grunting, maybe not with
That was
me.
just
Maybe
you,
they
Prashant.
they didn't do it with me.
That
The
was just
grunting
you.
didn't work. But so that's certainly me better reading of the room and sort of what's going on.
Yeah.
And the other is sort of this continuous friction and tension that exists between a founder that has, obviously cash is always short. Everything is like, what's the timeline? Yesterday's the timeline, right? And then you have sort of obviously people taking their time in, making decisions and weighing the pros and cons and coming up with a very, very, very long list of things of why things might go wrong. And, culturally, I've been trying to figure out what is it that goes into the brain to kind of come up with those reactions. So my current, I reserve the right to change my mind in the future as I learn more. But for now, I think that one real characteristics of Japanese traits is that Japanese really, really want to be right. They don't care about being first, but they want to be right, which is also quite interesting
Apple
take.
way.
How'd you build, a startup business if people don't want to be first? What is the first cohort of customers that are going to say yes?
Yeah.
Do you have this experience as you hire talent internally, or is the young Japanese 30-year-old who wants to work for a tech startup built like tech in Southeast Asia talent? Do you find it internally as well as externally?
I mean internally to Japan, is it?
No, into Habito.
Javito.
To a degree, I mean, obviously hiring people into Habito is a challenge because finding the right cultural fit is always hard, regardless of which country you're actually operating. But in Japan, it's triple hard. A, because of language barrier. Maybe you find the right person with the right cultural traits, but certainly don't have maybe the language capabilities, or they have the language capabilities but not the cultural traits. So that is like super hard and sort of triangulating that. And another interesting fact is that in Japan, hiring people has the highest intermediation cost.
Oh yes, definitely.
Maybe this one you should definitely know.
There's a small company that we compete against called Recruit
Holdings. Recruit
Yes,
Holdings. That's right.
Yes.
They're like
they own Indeed globally.
Oh, okay.
Yes.
30 to 40% first year salary is not unheard of.
No.
Wow.
Fun fact about Japan: if you want to leave your job, you have to ask your boss for permission.
That's wild.
And the boss can't fire you either. So
the boss can say no.
The boss can say no, and I actually had a couple of examples of people that were they actually signed the contract and they had to renege on the signature and said, no, my boss doesn't let me.
Wow.
Yeah.
And Japan is the only country where I've ever hired someone where I needed to actually build a pitch deck for the wife of the candidate. So it's actually become like a family affair, right? You need to convince everyone.
That's actually pretty amazing. That's
Sounds
a
like
very
a good AI
egalitarian.
project.
Yeah.
It sounds like a great AI project.
Yes.
Yeah, seriously.
So I have a flip question. So how do you pick your investors? Because now, not all VC is calibrated to slow, patient, build right, build deep, build long. How do you kind of calibrate? Did you have to do something different in terms of your cap table?
So first of all, that statement coming from an entrepreneur makes me smile already, because as an entrepreneur,
It's a tongue-in-cheek question.
There
is no such thing as patient VC.
Patiently choosing your investors, but thank you.
Choosing your investors.
Choosing
Do
your
you have
investors.
money? Are you willing to give me money?
I'll take it.
Right.
We'll figure everything else out.
But certainly, a deliberate strategy of ours was to build a business that brought both global and local talent together. And this is certainly true in terms of how we build the team and how we try to build the cap table from day one. So it's been a deliberate effort. I don't know whether it made my work sort of triple harder, but every round has been collated by a global and a local investor. And I would say the local investors generally has been a fast follower of the lead terms from the global investors. So this is actually generally a challenge in terms of raising capital in Japan, which, it's an emerging ecosystem when it comes to the fintech startups. It's an emerging ecosystem when it comes to startups in general, and therefore capital is also emerging.
Yeah.
So
we used to have a TIA Japan actually, and we shut it down after a few years because we just could not find traction in the startup market. I mean, there was a very strong core niche of people who were really interested in
startups.
There were no startups. Yeah, that was part of the problem. And there were a lot of corporates interested in the startup space, but literally we had a supply issue. We couldn't find enough startups, and so we shut it down in 2018, 2019.
Wow. I actually, this is definitely one of the conundrums as to wrap my head around it, because being on the ground, you definitely get a feeling that there's a lot of money available. Money is available.
Yes.
It's available in sort of weird pockets of money and funds that have real terms and mandates, and so it's difficult to navigate. There's definitely feels like there's an oversupply of capital compared to the basically offer sort of reasonable startups and entrepreneurial capital. It's very difficult in Japan to find second generation of entrepreneurs. People don't leave their job in their 30s and 40s to start businesses. They just do not.
Yeah.
So
they don't get permission.
They don't get permission from
the boss. Boss says no. You're staying here in your desk job, sitting by the window.
Wild.
You'll like it.
So that is a little bit of the friction, because then when you actually find, good founders that have track record, there aren't very many, you would assume that, money will flow your way, but it doesn't. And when you actually look at the macro stats on capital raising and capital deployment in Japan, pretty much at every single stage, the round size is smaller, and the valuations are smaller than everywhere else, almost by a full cycle. So there's also a little bit of sort of the DNA of the investors in Japan that is structurally different than what you can find outside. So, and that goes back to, downside protection.
They don't want to get it wrong.
So tell us, How long have you been at it again? And then tell us a little bit about your progress. What have you found easy, and what have you found hard?
We entered Japan in 2022, April. I think we were one of the very first people amongst the 5,000 that were allowed into the country. We launched it. Yeah. So we're like,
On the first plane.
the first batch of foreigners. And we launched in summer of 2023, so we've been at it for a couple of years, and we've been in market for a year and a half. What's been hard? Raising money has been hard, but that's just the down cycle that every single startup is facing.
So do you think that's the macro landscape? It's not Japan specific, it's not fintech specific?
I think Japan makes it harder.
Okay.
Certainly not easy.
Yeah.
I mean, certainly the first round that we did, I mean, Japan was completely off the map, right? Most of the funds were like, yeah, we invest in Southeast Asia. Do you have a business in Southeast Asia? I was like, no, we're Japan specific. Or, our mandate is ex-China, ex-Japan. So the ex-China, ex-Japan is like the norm.
Right.
But it is changing. So back of sort of what's changing, that's certainly something that we're definitely seeing a lot more interest.
Yeah.
And subsequent rounds where it was definitely easier to raise from global investors. What's been hard is actually understanding the media landscape and understanding how you acquire customers economically in a market like Japan, because everything you have learned about digital marketing outside of Japan kind of doesn't work in the same way in Japan. So that took us a number of months.
Is it because they just visit a completely different ecosystem, or
the ecosystem is different, the cost structures is different, what people want to see, and so and there are many other differences around how you build a product and why a natively built product for Japan looks very different from what actually happened and what you build outside, which is somewhat what you see also. I would say sort of a global platform really struggling to adapt their global product into Japanese marketing. If you just put a little bit of slap a little marketing on it, it just doesn't work. Many things around interesting factoid. Even the color red and green, right? Where red is like stop, green go. It's the opposite in Japan, right? So even like some of the basics like UX UI is like to take for granted. No,
green means stop.
Don't do green means stop. Red means go. Yeah,
like
absolutely.
on a traffic light?
No, not a traffic light. But no, many.
Except
but
for
many
traffic lights.
Take a traffic light. No, not international. But say for example, taxi driver. I don't know if you see the taxi drivers, right? When the light is red, it means it's free.
Oh, interesting.
I don't think I've ever known that in all my time.
That's why you never got it. That's why you really struggled with cabs, right?
That's why you don't get a cab.
That's why I always take the subway.
I mean, I could stay here for hours and hours. Like every single aspect was like, oh, this I know for a fact. Maybe not.
So I'll as a founder to founder, like what I've and we're struggling with this as well. And I was just discussing this with Maria before the call on PMF. Like, how do you get PMF? Like, single hardest thing. How do you get product market fit? And in many ways, I'm Indian. I understand the cultural nuances of like what India has. I speak multiple languages. I know what kind of works. And we had Sukin on the show last couple of weeks ago, and we were just discussing the same thing. The PMF is officially the founder's job, right? You can't outsource it. You can't delegate it. You can't have AI solve for it. You basically need
country.
So it's all you. And despite like the advantages of being native to the country where I'm looking to serve, I struggle deeply, right? And I can only imagine that being 10x harder for you. How have you gone about navigating that? Like, how are you the chief salesperson convincing customer by customer to come on board and take on a Habito kind of savings product?
Yeah, so first of all, PMF absolutely is a challenge. I would say in Japan we've done things a little bit different in terms of how we built the business, and I would say maybe this is, hopefully time will tell, probably the single biggest decision that we made that was very different from the very outset. You build, everywhere else you build product, team, and then maybe the regulation on separately or subsequent to that. In Japan we kind of done it the other way around. First was team, then regulation, and then product. So figuring out who was the core team and how to essentially who to have around the table was the single biggest decision that we did, and we did it at the very beginning. We weren't live, we didn't have license, we weren't even in country, frankly, right? So that one, I think I would probably go and repeat it that way. Whether it guarantees PMF at the end, I don't know, but that's certainly something.
It's necessary. Absolutely, yeah.
I would say the other aspect in Japan that I think is a little different from every other markets I've worked in, would be Singapore, Southeast Asia, Middle East, the US, in Europe. Japan is a market that has, I think, the largest inertia and entropy that I've ever seen, right? Just nothing ever change and moves. So that's the biggest challenge for us, because we're trying to basically make changes on a constant basis and improve iteratively, and so the time span is elongated. So cash conservation, building a business in Japan, is like super it's always important, but in Japan might make the difference between life and death. I would say also the other big difference in Japan, which also makes it interesting, is that once you actually acquire a customer, it's probably there forever. So I can't get to, I'm going to say this, I can't get to 1% churn, right? On my but this is only
It'll
Japan.
empty the business.
So once you have a customer, you have it forever, and that customer generally generates good lifetime value. Like one attractive part, and this is true across all financial services, not just the business that we're building, is margins in Japan for all financial products, be it payments, investments, insurance, the largest, very margin deep, because distribution is so expensive, right?
So once you get them, you hold them.
Even payments.
Yeah, largest interchange rate on debit and credit.
Is that right?
So, there are. I feel like I should actually provide a bigger banner for Japan. There are things that are PayPal. There are things that make Japan attractive as an entrepreneur and potentially also as an investor, right?
Yeah.
Because Japan has, an incredible amount of assets, whether it's not necessarily in the startup space, but very good businesses that are very cash rich, generally margin rich as well, and they're reasonably cheap. The yen has never been cheaper. I mean, when we entered the market, the yen was like 115 to the dollar. It's gone up to 162. It's now like back at 140. If you're a foreign investor, you can get good deals in Japan.
And the margins, I'm intrigued on the margin story. So when I lived in the Philippines, we ran Gcash, and the business model of Gcash, like many Southeast Asia fintech B2C businesses, are you build the scale and payments, but you make the money somewhere else. And so it was relying on the cross-sell. Well, you have to win the customer, you have to keep the customer, then you have to cross-sell the customer, which is like multi-year journey. Can you make money directly acquiring and then you're good?
On the first step.
On the first step, or do you have the same journey you have to do as, say, the
Is this a general statement? The general question, can one actually do that, or can I?
Can you?
Well, our journey is a bit more like that, right? Because we acquire customers on a savings product, and then sort of we cross-sell. So we definitely have that kind of cross-sell challenge ahead of us. Can you acquire customers directly on a margin generative product on day one? Yes, you can, but in payments, the challenges are, and the competition is very, very stiff, right? And on investments, you can, but you need, the cost of acquiring that customer is extraordinarily high. So, the average, it's in the range of like, $500 to $700 for an investment customer. So you can, but you need to still stick at it.
Can I ask one more question then? But it's more about fundraising as a woman, because obviously Japan has struggled. I mean, it's for decades Japan's wanted to be more open, have everybody speak more English. Sorry, don't know why. And then,
we'll edit that. Don't worry. It'll be the first edit we ever did on the show.
That would be good. We should leave it in just because of that.
And it's a really tough working culture for women. So when I was at Apple, I used to negotiate with Japanese suppliers, and I was in the hardware business. So it'd be me and like this like Chinese dude who worked for me. This is why I think I was saying that. And we roll into these meetings, and there's like these old school Japanese hardware suppliers. So they're all men. And then obviously I was the one calling the shots, but got shunted to the corner, and they spoke to my guy from Shanghai, who's like this like big burly Japanese dude, and I would just get basically ignored. So in your conversations, fundraising in Japan as a female co-founder, I mean,
Partnership discussions.
Yeah, exactly. I mean, has your gender ever really affected anything, or do you feel like it's been relatively equitable?
Definitely not equitable.
Okay.
Start from there. Definitely
and
not
worse
equitable.
than like here. Worse than
yeah, but I think that the combination of women and foreigners kind of balance themselves out, because as a
I've never seen a woman foreigner founder
no, correct.
before.
That's exactly.
They don't know what to do with you.
That's exactly
You're
right.
like,
That's exactly right.
The triple
So
F.
it's
unicorn.
Does not
Female
equate.
founder,
Foreign.
foreigner. Yeah, you're right.
So this one,
Triple F.
yeah, correct. So I think it's a Venn diagram of one, to be honest with you, that intersection.
That's what makes it special, Sam.
It's, no, I've been, jokes aside, it's, I'm not sure I'm necessarily the only one, because I'm sure maybe there are in other sectors, other
I
women.
would say single digits for sure.
Single
For the
digits.
listeners out there, if you know any female
Founders.
fintech foreigners in Japanese,
Let us know.
Let us know.
So an anomaly is how I would describe myself, right? So
Yeah.
when you're in front of an anomaly, I think basically human reaction is a little bit like Marmite, I guess. So you kind of either love it or hate it, and that's exactly what the general response that I get like this, oh my God, you're like a purple squirrel, come, and I love you, they hug you,
Let's
and
take a selfie.
and you're like,
For our Aussie viewers, she meant Vegemite.
Exactly.
Is that right?
Yeah.
Oh, is that like the British version?
Yeah.
Oh, sorry, guys.
Vegemite.
Yeah, Vegemite.
Much
There
more
you go.
understandable
Marmite.
in this
Okay,
region.
There you go. But I had the fortune of meeting people that have been incredible supporters along the way, and they've been super helpful, great endorser, energy booster in many ways. So I'm, it would be unfair for me to say no. It's only been like, just people rejecting entirely the notion of a female foreign.
Of course.
But definitely my fair share of rejections, which go from like, oh, we're waiting for Sam. It's like, well,
I'm Sam.
I am Sam. Right?
Sam, I am.
Sam, I am. And then the variance on the sucking of the teeth, and the bowing very, very low, and a few outright rejections, such as we do not invest in women, we do not fund women, and we do not invest in foreigners. So both. I mean, there wasn't
foreigners is less offensive though. No?
Well,
know.
if you're a foreign, 50% if you're about foreigner, right?
What if you're foreign female?
And female
That's
is like, no
Well,
chance.
okay, my point is simply,
This is a double
one could
full bow.
imagine an old school Japanese investor who's like, you wouldn't know enough about our local market in order to succeed. That is like a semi-reasonable hypothesis, I guess. I think the females part I cannot empathize with whatsoever.
I mean, I have to say, those sort of outright and very open rejections as to the motivations of being far and few between, right?
Yeah.
So generally, it's just a very polite and honorable, deep bow.
Yeah.
But I think things will change, right? I think in any population, when you see the first set of successful partnerships, I think things tend to change. So I'm just hoping that you will be the beacon of the
Go Sam.
the change.
I mean,
Yes.
Prashant, my own journey, my own life, everything I've experienced, I cannot think of a founder who has taken on a harder. This is challenge.
really hard.
This is the next level.
Yeah.
And kudos to you
Thank
and
you.
what your team is trying to do. It's incredible. It is super difficult, and I'm excited to see how it goes.
I'm in the Sam
Yeah.
Fam Club.
Likewise.
Thank you guys.
Yay.
Oh, amazing.
All right, let's keep going. We'll do some hot takes on some other topics we have lined up for today. All right, let's talk about this AI memo from the Shopify CEO, Toby Lutke. So basically, he spells out his criteria for using AI within the company. It's a really, really high bar. And then he says, you know, like, everyone should be using it all the time. And if you want new headcount, you need to be able to justify why you cannot even accomplish it using AI first and foremost. So Peter, that obviously goes straight, I think, to the question of like AI versus talent, very much in your field. What are your thoughts on this memo? And yeah, what do you think about his point about the hiring side?
First of all, he's Canadian, so we should probably say look, eh? So look, first of all, if you are interested in tech and you have not read this memo yet, read this memo. I read it first through we could talk about the talent angle and recruiting angle in a minute. The very first time I read it through the lens of I'm a tech leader, leading a tech company across the region. And this was so bang on to the way I think about challenging my own team that if you are out there and you are listening, I think he is spot on. And I think a lot of companies are doing this right now. Yep. It's just this memo got circulated.
Yep.
And it was so well written. I think there are many companies doing it. And if you read that memo and say, oh, wow, that's pretty bold, then I would really gut check your own gut. Yeah. Because the world is changing that fast. And his whole point is it's changing so fast that before, back in for those of you old enough who can remember the dot-com era, the dot-com era was like, if you wanted to build a website, you had to gather resources and, millions of dollars of resources, and you had to have somebody called a webmaster. I don't even know what that is anymore, but there was people and tech roles, and no one knew how to code and all this kind of stuff. With AI, literally, the most junior call center manager can figure out productivity savings of 10, 20, 30% and do it in a week or two. And that's what's happening out there right now. And his memo was completely spot on. And we are saying to our own staff, not only can you not get additional headcount, but you have to cover any cost inflation costs as well. And you have to do that with AI as well. And you have to go figure that out. Oh. So
I'll see you and I'll raise you, Toby Lutke.
Exactly. Wherever you are, you're so spot on. We love you. So I'm sure he's a listener for all 4 episodes. So I think he is right on the right track. And I think if scale tech businesses are not leaning into this right now at leadership levels, you are behind.
All right. And then from the talent side?
Yeah, from the talent side, it'll be very interesting. I think the jury's out on what it will do to the labor market. I tell you what it will do, and why we, as a labor marketplace, we are not concerned. So in Southeast Asia and Australia, New Zealand, so ex-Japan, ex-China.
Sam's favorite word, ex-Japan.
Exactly. We estimate there's about $30 to $35 billion companies spend finding people. Only 1 to 2 of that 30 is on tech.
Right.
The rest is either with recruiters or their own internal talent acquisition teams, like $28 out of the 30. And what AI is going to dramatically do is collapse down very large chunks of businesses that are still manual or human enabled, and it's going to do it very fast relative to even the trends over the last 20 or 30 years, which is just the clock speed of the world right now. So for us as a tech player playing into that space, that's an opportunity more than the volume threat, which is a possibility. We play out worlds like that, but it's too early to tell what it'll do to the macro labor market.
Yeah, okay, fair enough. Prashant, do you think a policy like this works in Asia? I mean, I think it actually, his memo echoed a lot of what you said on the podcast last time.
That's right. Yeah. And I was going to just say, we have touched upon a lot of this in the last 2 podcasts, if not maybe the last 3 even. Because, again, I think he goes to, there's a few things going on here, right? One is he's calling for a mindset shift.
Yes.
Right? And we talked about a mindset shift even in podcast 0, which we didn't.
Guys, basically we're super prescient and we're just way ahead.
We're way ahead. We wrote them.
We're awesome.
We drafted
and
it changed a few things.
Unreleased podcast that got published. Basically. So anyway, so we've been talking about this for a few episodes now. I think he's calling for a fundamental mindset shift, and I think look, even I'm seeing this within my own company, right? You can keep nudging people, you can keep encouraging people, you can keep motivating people, but at some point you gotta say, hey, the game's changed, right? This is the new operating model. We're gonna move to this model.
Yeah.
You either shape up or you ship out, right? So, and I think that's kind of the calling here. This is a war calling, right?
Yeah.
So basically, he's saying, hey, look, this is the new world order for us, like for Shopify.
Yeah.
And so I think you need to put that stake in the ground so that the rest of the org knows what you mean, right? Because otherwise, there's so much mumbo jumbo around, like what's possible. Am I using AI because I'm using ChatGPT to kind of edit my emails? I use Gemini to recompose in Gmail. Is that usage of AI? No, he's saying, hey, you guys need to be 10x yourselves, right?
Yeah.
Like you need to 10x your productivity. You need to 10x your thinking. Everyone can become a super designer, super engineer, super PM, super business analyst, and whatnot, right? So he basically is calling out for everyone to go super 10x, right?
Yeah.
So the 10x mindset is what he's calling for. And I think, look, yeah, you can say, hey, look, this works in the US because labor is expensive and whatnot, and in Asia we have the benefit of lower cost labor, but this is not about cost, this is about productivity, right?
Yeah.
And yes, there is an impact of productivity on cost, but this is about getting shit done, right?
Yeah.
That's what he's calling his GSD. You can bleep that, but but I think that's the main
won't,
point.
okay.
That's the main point that I see here, and like the head count and stuff is just to basically say, hey, look, the world has changed.
Yeah,
If I
right.
don't restrict your head count, you'll
think-
continue to do the same things with just a tiny tweak. I'm asking you for a fundamental change.
Well, I think there's also one other element that we may have mentioned in the past as well, which is to the middle managers and the larger company mechanisms. There is a difference with AI between value creation and value capture.
Correct. Absolutely.
And so, you know, if you run a large tech organization and you don't think your junior coder is figuring out ways to create 10, 20, 30% efficiency in the code task that you give that person, you're kidding yourself.
Yeah.
The question is the capture going to be by the junior coder taking the dog for a walk for 3 hours and going to have a coffee and play a video game, or is the value capture going to be through your bottom line in the company? And the second part of this memo is about value capture, which is your budgets are no longer going to change and they are fixed now and you have to deal with it.
Yeah.
And so the call to action for middle management is not only has this world arrived, but you've got to figure out how to capture it. And I think that it's the companies that succeed at capture and creation that are going to win.
Yeah.
But capturing is a very different thing than creation in AI.
Okay.
Yep. I'll give you one example, and maybe Sam, you have a thought. I was just in India, and a very good friend of mine used to be one of our DevOps in a previous company, just quit. And I was like, hey, why did you quit? And he's like, well, I think a lot of what I can do can be done by AI. In fact, I've proved that I have fundamentally replaced myself with automated monitoring, automated scaling, continuous deployment, like basically everything that he used to do manually by running scripts on AWS or whatever server stack they had. He has kind of pushed into AI. And he's like, well, this thing does a much better job. It doesn't take breaks, doesn't go on vacations, doesn't have weekends off. So before they fire me, I'm going to just productize what I've just been doing, and I'm going to make that a company, right? So what everyone is now doing is, if you're in that level, you're saying, well, I'm going to probably get replaced, or there's going to be a mandate top down to replace me or kind of marginalize me, or the next pay hike I'm not going to get. So I might as well productize this and go run a startup of my own.
Yeah.
So I think people are figuring out how to 10x themselves, and this memo speaks internally, but I think even externally, I think that's working.
Did you find that there's any difference between how AI is impacting like startups that are trying to get to product market fit and the mindset? I mean, this is largely a mindset consideration.
Yeah.
Versus, a large company where perhaps there's, you talked about middle
Bottom line.
management. I don't have middle management, frankly, right?
Yeah. Well, one thing that we've had to spend a lot of time on is that startups spend less time on is things like data security and the legalities of where information goes. and being very thoughtful about your company data, right? So, I mean, every startup, I don't know a founder who's not really going to care that somebody's opened up ChatGPT, uploaded a few things, and has automated a task that makes it 80% faster.
Yeah.
But in a public company, if you're taking databases of customer information and uploading it directly to ChatGPT, that's a problem. So there is a lot of really complex issues you have to think through at pace, at speed, at a large company to get to the value creation part, so that you can eventually get to the value capture part.
Right. I mean, the data example is certainly an area that anyone operating in regulatory, highly regulated industry actually exists across the board.
Yeah.
So that one, the regulator kind of looks in your eyes and says, as long as you don't commit fraud, don't steal customer money, and absolutely do not lose their data.
Yeah.
Right.
Exactly.
These are the three things every regulator kind of briefs you before. It's like, now here's a license, sign on it.
Yeah.
Right. So I think that aspect of getting AI to begin to operate, I would say, a bit behind the screens and behind the scenes. So in areas that may not necessarily be customer facing is certainly something I'm facing and I'm seeing already at Habito. So we have this word for sort of how we think about AI, and it's essentially a crossfader strategy. There'll be an inflection point where everything becomes so embedded from an AI perspective that anything customer experience, products will be AI enabled first, and there might even be a scenario where everyone will have an AI, personal AI money manager. We're not quite there yet because people don't make rational decisions about their money, right? So the emotional barrier, sort of giving up your control over your money to an AI, just isn't there yet. But I'm confident it will come. So crossfader strategy is basically getting AI to work to on the data side, on the advisor side, helping basically the back end of the company becoming more effective and more efficient. So I think for smaller companies, the efficiency generation, efficiency capture, which for larger companies, it's actually can be divergent, in fact. For us at our stage, I think it's a little bit more aligned.
And look, last couple of weeks ago when Sue Kin was here, again, we had this topic on this particular discussion, and it was about, hey, does AI really help you get to product market fit quicker, right? And I think it was at that time I bumbled along a little bit, but I think it absolutely does, because look, the single largest time suck in a startup is when someone has a hypothesis, then they pass it on to someone who then kind of documents it, and then you kind of get some buy-in, and then someone designs it, and then someone builds it, and then someone puts it out, someone collects the analytics, and this whole thing could take a week or 2 weeks, right? And that's not a very elegant setup, but I'm describing it a very elongated version of a setup, right? But what we're pushing for internally is we say, well, everyone's a PM, and if you're a PM, you're basically responsible for customer outcomes, not shipping product. So if you're shipping a customer outcome, then you take a hypothesis, you generate a microsite, you design it, you produce it, you put it out there, you instrument it, and you come back with the data, right? You come back, and it's one person, so there's no context switch. You're not driving buy-in. You don't have to. You can do this in your own time, in the middle of the night, whatever clock speed you want to do it. And what that does is, if you have 20 people now going after solving for a customer product market fit, your chances of getting product market fit, because you have to kiss 1,000 frogs. How quickly you kiss those 1,000 frogs is going to determine, whether you're going to be successful or not. So I'm just like, man, all of you guys get out there and kiss some frogs. And first, like the
Fuck
first,
her up, baby.
you're talking to a bunch of millennial Indians. They're like, "What? Kiss frogs? What's wrong with my boss?" Like, and then I'm like, "Oh, no, it's an expression. It's kiss some frogs." But now it's part of the mindset. They're like, well, it's if I have a hypothesis, exactly. It's if the mindset is shifted in the sense that people are not saying, "Oh, I had a hypothesis and I put it to the research team to go research with the customer." Right. Now they're like, "Well, I had a hypothesis. I put this out there. I talked to 3 people, and by the way, I built this microsite. I directed them there. I bought some ads, like $20 worth of ads to drive some traffic, and here's the data on 4 customers.
So much better.
And then you're like, well, as a leadership team, we have a much easier time. A, run those experiments ourselves because we're doing our own dog fooding, and B, we can then kind of pick up these signals and without any bias or prejudice, bet behind the right ones. And some of the
So-
best ideas are coming from places we don't expect from the organization.
What's interesting is I was spending a bit of time thinking about, at the same time that's happening, all of those tools are becoming easy and more accessible for larger scale incumbents. And so I wonder how the scale differential plays out between startups, where that 2-week exercise that was the old school way of doing it was so light years faster than what big companies could do.
Yeah.
That's the source of the challenge that often evolved.
Yeah.
But now big companies, like, we're doing all the same things that you just described.
Yeah.
And one of the things we wonder about is, what does this mean for how we will get challenged by startups in the future? What does it change? Like, yeah, and I don't know what the answer is, but I could see over the last year in particular a huge step change in the throughput velocity of what we're capable of doing, and it's also because our 28-year-olds down junior in the engineering team and our 28-year-old product person are doing this now.
Yeah.
And it'll be very interesting to see how this plays out.
Yeah.
So you ascribe this to improvements in technology and AI in particular, as opposed to anything that you've done in terms of culture? Because
Yep, I mean, AI by its user interface makes it easier. You need to have less technical skills to get some things up and running quickly.
I think, I mean, the way I'm interpreting this, that AI is a necessary but not sufficient condition for
Absolutely.
what you're
Yes.
describing just to
Yeah,
happen.
that's a
Because
good
I
way to
can
say it.
think about many examples in Japan again, where AI
It's
is
not
equally
really-
available, but
Yeah.
none
Yeah.
of what you just described is
Yeah.
ever going to happen, like ever.
Yeah.
So I think, look, there's the age-old question of like startups versus incumbents,
Yes.
right?
Yeah.
So startups are striving for product market fit and scale, and they just have to get that done before the big incumbents can figure out
That's right.
UI UX, right? And so if the big companies can figure out user interface, user experience, and get there before a startup in the same space gets product market fit and scale, then they're always going to win.
Yeah.
But the bet is always against the incumbents because they've got 15 things to do and they've got something to protect. The startups have one thing to do and nothing to protect, right?
And that doesn't change.
Yeah. And so that, I think, is, and we're like scrappy. We need to do this. They kind of want to do this, right?
Yeah.
We have to get this done to survive. They kind of need to do something to get a bonus, right?
Yeah.
It's like a fundamentally different like game we're playing, right? And I think
stakes are totally
the stakes are
different.
very
Yeah.
different.
Yeah.
So I just think, yes, there will be marginal improvements, and those marginal improvements for an incumbent that's at scale are so big, and it impacts the bottom line, shareholder value, blah blah blah. But I don't think it takes away from the startup ecosystem because
But that scale differential that, Peter, you were describing, I think structurally is getting eroded, particularly in this financing and macroeconomic environment
Exactly.
where startups are basically pushed for a variety of reasons, and most of them are actually good reasons, to actually prove product market fit, get to productivity, get to profit margins faster than ever. So I mean, this one I certainly feel it directly. You know, the extent to which we can experiment and we can look for alternative ways of doing things, it's eroded by the sheer pressure that we have on revenue
get to that
and
business
profit.
model, yeah.
So that, I think, is, I mean, I don't know where we're going to net it out, but there is a risk, particularly in the venture space, where the capital looking for returns at a faster pace with, frankly, lower risk reward profiles produces the opposite intended outcome at a macro level, as a systemic level, because I think there are generally fewer and fewer startups that are fundamentally trying to be so innovative, because between the challenge of like, do I solve this problem in a way that is actually proven to work, or do I try something different? Entrepreneurs now choose the first.
Are taking a safer path.
But maybe we won't have the big blowouts because of this change in mindset, and maybe we'll get like more scrappy companies that kind of start to generate some revenue. It's not fake product market fit. It's not like GMV or like talking about throughput or something like that. They actually have monetization, and they can test like customer elasticity to pay. And maybe that's not a bad thing after all. I think this pendulum went the other way when it was zero cost kind of capital. I think you got a lot of like effectively garbage companies and scams.
Totally.
And so hopefully fewer of those.
We've had our fair share of that. Peter, did the AI chatbot Peter Poet produce anything for this week?
Oh yes, we have the poem of the week.
Peter.ai.
Peter.ai. Sorry, I was like, what am I saying?
PB.ai.
No, let me just find it here. Now, because it is AI Shopify memo,
Of course.
I took liberty of consulting AI to help me craft this.
Well, of course.
And like any good AI human user,
Yeah.
you take the raw bones and then you improve it from there. So this is for the AI Spotify memo.
This is
And
for you, Toby.
I've decided to...
Shout out to my man, Toby.
Yes. So this is... I've decided to write poem in Shakespearean sonnet form.
Look at Sam's face. She has no idea what's about to happen.
Yeah.
No idea.
It's okay. You just roll with it.
And
Absolutely, roll
so,
with it.
although I may not have authored the whole thing, you can judge me on my Shakespearean Patrick Stewart, effect, right? So,
It's a delivery, man.
Sonnet 451. On the rise of AI and the creed of code. Shall thee now yield to mind of wires and light, where once thy hands and thoughts did shape the day? Behold, the dawn of silicon-born might commands the throne where Shopify holds sway. Let no one ask for aid, the mandate cries, till first the ghost in machine fails to serve a brave new world where chip and spark devise the work that once required thy flesh and nerve. Yet murmurs rise in the halls of geeks and spiels. What worth hath toil, if thought be not thine own advice? Does speed alone give truest margin yields? Or doth ye risk thy soul for ever higher stock price? Still, tech's great stage demands each player learn to dance with code, or else be left to burn.
The ominous end, but yeah.
The delivery was incredible.
Yeah.
Yes.
Yeah.
Nice.
Awesome.
Okay.
So is this a tradition?
Yeah.
Should I come prepared next time?
No.
It's just for Peter.
It's just Peter.
Okay.
Yeah. Prashant has offered to wear a kilt, but that hasn't
Okay.
I
happened
like
yet.
the limericks better.
Yeah.
but anyway.
all the cameras are
Shakespeare's hard. Shakespeare's hard. Okay. Talking about AI, so Grab has actually been in the news a lot recently. A few weeks ago, they hosted a big product event. They released a lot of products that are now AI-driven, consumer-facing, which is kind of cool to see the actual implementation of it on such a big consumer-facing app. But this is also on top of their big 2024 earning results, and then on top of the GoTo acquisition mergers that we talked about last time. So let's talk a little bit about the earning results for 2024, which is pretty strong. We're actually a little bit late to this game, but I still think it's worth talking about. So they reported 17% year-over-year revenue growth in Q4, as well as an all-time high adjusted EBITDA for the quarter. Peter, what gets you excited about the Grab earnings? Is it the EBITDA? Is it the revenue growth? The fact that they're starting to sustain this at such a large scale?
Oh, look, as a tech person in following this story, like if you're in tech in Southeast Asia, you've been following this story for years, right? Just to remind everybody listening, you don't have to go that far back, 2021, 2020, where Grab was burning a couple $2 billion a year.
Yeah.
The journey to get here, if you followed year by year, half by half, quarter by quarter, has been yeoman's work, right? The Grab executive team and the Grab organization has done work on every dimension of their business model. And they were already an interesting, high-flying app. But over 4 years, it was the hard work. The cost structure behind the scenes, the spans and layers, the pricing in Singapore, which we all hate. Thank you, Grab. I'm helping you get to profitability. So, this is all playing itself out. And let's be clear. Like for a quarter, to be almost clocking 200 million in EBITDA, that is not a small thing.
Yeah.
And this is they deserve I think a bit of kudos, but not for this quarter. This is a long time coming
For the overall trajectory.
Yeah. And you can't declare success on sustainability yet, but they're damn close to it now.
Yeah.
And that you got to give credit for because of the longer arc of what Grab's been doing.
Yeah. With that said, I think once the earnings came out, because their 2025 guidance was a little bit lower than analysts' expectations, they actually took a hit in the markets. I think they dropped like 8%. They've rebounded since then, but I mean, yeah. So it's punishing. It's punishing being in public markets.
It is punishing.
Public markets.
Because they are executing at one of the highest levels
Yeah.
across Southeast Asia that
Yeah.
we've seen, right? And it's just punishing.
Yeah.
Yeah.
I think the only thing to be said about their journey is, when you look back at their journey, the only thing you have a little bit of a bad taste in your mouth is when their IPO floated at 40 and they got it audited at 40.
Yeah.
Those retail investors have taken a bath.
Yeah.
And that you kind of go, that feels a little bit icky.
Yeah.
But the longer arc to do what they've done in 15 years
Yeah.
has been nothing short of incredible.
I mean, it was icky, but it was also just the time period. Like, it was not, it wasn't just Grab. It was, I think, everything,
this was
everybody
like-
in that
Absolutely,
cohort.
this is like a tech story, right?
Yeah,
So
that was
the-
just how it was. And then actually the follow-up from our conversation last time about the GoTo is that, have you heard about the Meituan rumors? So,
No.
okay, so apparently Meituan from China is looking to enter the Southeast Asia market, which is one of the reasons why Grab might be looking to beef up their operations with the GoTo acquisition. Because I think last week we were kind of talking about like, can they just like bleed GoTo out, like wait until they, and it's like, but that does present a little bit more like urgency in terms of the timing.
Yeah, or if I'm GoTo, I'm floating that news to kind of make sure that Grab is not like, gonna bleed me out.
Like, I heard August 1st, you're coming in.
I mean, let's be really clear, right? You take Gojek and you take Grab and you put them together, and when both of them are on the fringe of struggling to profitability, that is potentially the formula for outsized margins and outsized profitability, right? So it's not like there's a long bow that you have to draw to say what's the formula here. No, it's the number 2 player and the number 1 player getting together to dominate the market and do like 60, 70, 80% market share.
Yeah.
And that, if you can pull it off regulatory wise and all the other things that they would have to get through, there's a lot of logic to that.
Yeah. Yeah.
I missed that session, but what was the answer on the because getting number 1 and number 2 player generally
we think
together.
They'll be fine.
We
think that GoTo has enough sway in Indonesia, and that similarly, I think.
Well, I think
the competition
Singapore
here is not,
question would be the most because
exactly.
they make most of their profit
Here.
from Singapore transport.
Yes.
That's me. Thank you again, Grab. All you have to do is pull out your Grab app and look at the pricing, and you know it. And so, when back in 2015, when Seek bought JobStreet and JobsDB, the one market that lowered price controls was Singapore, and we to this day suffer from that legacy.
Interesting.
So the Singapore Competition Commission, that'll be the tough one.
So they obviously let it through. It was just a matter of price controls.
Yes.
Yeah.
Yes, but
Sure.
that's
key for margins.
That's the key rationale for the deal.
Yeah, but I think if you put the Meituan thing in, then margins is, it's an important part of the play, but it's not a purely financial decision anymore. It's also just like it's a competitive play.
Well, it's a little bit unclear, I'd say, because there's lots of other. It's not like there's other apps. There's everything from Zig all the way through to Tada. So there's other choices. But people keep opening the Grab app and paying Grab.
Yeah.
People keep opening the Gojek app and it's just habit.
Yeah.
But so the point I made last time is this is not good for the ecosystem. So whether it passes or not, it's not great for the ecosystem. It's great for the companies, perhaps. It's great for Grab.
Yeah.
But it's not good for the ecosystem.
When you say ecosystem, what do you mean?
The consumer
Consumer
ecosystem.
ecosystem.
Because and that's what
definitely not.
And that's a primary responsibility of the
regulator.
company. Yeah, the regulator commission.
It is.
The commission's going to look at that.
Yeah.
And
it
whether
would never work in Europe. Let me put
it
it out
wouldn't work
there.
in many parts of the world. You don't
Yeah.
ever take 1 and 2 and join it and say because of what you just said.
Yeah.
Because now your margins are going to go through the roof, and that margin is coming from the customer's wallet.
It's really interesting. I mean, I wonder for transport specifically. Singapore really thinks about every Singaporean can use public transport.
Yes.
And Grab is a luxury, right? It's if
Yeah.
you want to pay for it, you can pay for it. So I'm curious how they would think about that space. Anyway.
Yeah. All right. From Singapore, let's move on to Indonesia for our last hot take of the day. Okay, so news has broken that Aspire, which is a B2B SME fintech company headquartered here in Singapore, is pulling out of the Indonesia market. Apparently, they're cutting down roles and starting to wind down local products in Indonesia. So I'm going to go to Prashant and Sam because y'all are fellow fintech founders here. What do you think about this move? And sorry, and the other part of the news release is the hypothesis that they're starting to focus on Australia and the U.S. market instead.
Yeah.
What do y'all think? Does this make sense for a fintech company? How hard is it to generate revenue in a B2B business in Indonesia?
So look, I think there are a few things under the covers, like when we think about it, because I built a India lending business, right? When your billings are in rupees and your valuation is in dollars, you're always a little bit sensitive to what's happening, right? So you're basically saying, well, I got rupee billings and the rupee's sliding 4% year on year, but my valuation is in dollars. So effectively, to begin with, it's $1 to 86 rupees. So I got to work 86 times harder than if the same business was to be built in the United States, right? So you get $1 for $1. So I got to do 86 times. Is the opportunity in India 86 times what the opportunity is in the United States? Perhaps, if you really have full capture. The second is, as that rupee slides, you have to work harder to stay in the same spot, right? So a lot of these businesses initially get funded with the euphoria of growth and everyone's looking at the growth. But then what ends up happening is when the rupiah, the Indonesian rupiah starts to slide, your revenues, which are reported in dollars to your investors, start to slide as well.
Right.
And so suddenly the same business becomes less profitable. So if you take the same business in Turkey, for example, if the lira slides 100%, you've got to grow 100 times
to make up.
so you be 100% growth to just stay in the same spot, right? So I think that's one big factor a lot of us kind of face. Like if the underlying currency in which our billings are slide, especially for a B2B kind of SaaS business, I'm sure that plays into this. The second is contiguous markets, right? Like you want to kind of deploy your core engines in one large contiguous market. And the United States, for all its like issues, is still one of the best large, deep markets. Now it's also highly competitive. There's a lot of players, entrenched kind of incumbents, but you get one English-speaking, high GDP per capita, very well capitalized, businesses,
high ARPU,
kind of like playbook, and you just go, and it's a relatively clean playing space, right? So there's a lot of reasons why you would do if you have a working product that you've tested in a market, and if your investors are saying, hey, I want to see more dollar returns, you take that, and as long as you have an insight as to how you're going to replicate that in another market, it doesn't always work, that would be the natural thing to do. Okay. I don't know what else is going on behind the scenes, but I think that would
US
be one
is obviously super attractive, and the currency issue. Sam?
Yeah, so I was two other points which I think are the byproduct of what you said. One is obviously building lifetime value businesses in Southeast Asia is extraordinarily difficult, especially in fintech, right? So where, basically there's no middle class, and small businesses go out of business very, very regularly, which is really the problem that I think Andrea was facing in Indonesia. So lifetime value, which is the lifeblood of fintech businesses, requires a degree of sort of, I would say, middle class that is willing to spend, and businesses that are likely to stay in business for the foreseeable future. So Europe could have been an option. US is a better option, from a licensing perspective. The other aspect is actually related to exit opportunities, right? Because obviously, Series C companies needs to have an exit story for any investor coming in at the subsequent rounds, and it's proving extraordinarily difficult to exit anything in Southeast Asia, particularly fintech businesses, which is why maybe this is a topic for another podcast, why so many funds are actually exiting the region, right? Because it's very difficult to monetize, even over a 10-year period, the average lifetime of a fund. So it's easier to have an exit story if you are or have a US story as well. So I think it's very logical. Whether or not, there are obviously challenges about entering a market on the other side of the planet, and things like, very, very basic of like time zones and things like that. But I'm sure Andrea will work it out.
With that said, okay, so fellow fintech founders are obviously agreeing that this was a logical move and makes sense. So was it a mistake for them to enter Indonesia to begin with? Was it under the haze of like, we just got...
The question I come to every time is, I know Aspire does a more B2B slant, but who really wants to be the number 5th entry into the... you have GoPay, you have OVO, you have Dana, you have Linkaja, and just think that they're not focused on B2B is not,
not enough of a difference.
Exactly. They are very focused on B2B, right? So, and I'm going to come in and my product's going to be so much better than these Indonesian. They're quite successful and battling it out and duking it out. Very tough. And the logic that Sam was talking about is being enforced by the capital markets today for all startups. Near term, path to profitability, market fit, and you're the number 6, 7, 8th entrant into like a frenetic, brutal, hard to
price sensitive,
you have to be exuberantly optimistic.
So you don't think they should have entered? That was a mistake. They got their...
Well,
you never say that without knowing the context specifically, which I don't. But I'll say just on paper, they took up a very, very difficult long-term game in an environment where everybody wants short-term. Yeah. And those two things don't go together, and you end up with the end up.
But, the US is not going to be a walk in the park.
Yeah.
Right?
No,
because,
never.
If there are 6 other players in Indonesia.
Like what we were saying earlier is, in this environment, you could be a sustainable small player in the U.S. and never break through to a unicorn, but maybe you become a $50 million company and you never crack it super wide open. But in a market like the U.S. or whatever, you could bounce around in kind of a...
You can have a very healthy business.
Yeah. You have a healthy business, but you're never...
And you'll be able to raise your next round because the investor is saying, hey, every investor coming in is saying, is there someone who's going to cover my bet, right? And if ultimately the IPO market in the U.S. will cover everyone's bet, then I think every investor is in, right? Yeah. So, and I think the risk you run when you have an Indonesia-focused business is ultimately you're like, who's going to cover the last bet, right? So then if you're not going to list in Indonesia or SGX, and Nasdaq's not going to give you the love that far away, then that's why I think, there was a correlation with Indian startups or Indian founders who had gone deep into Indonesia. Yeah. They're also like trying to pivot it back into India because you're better off taking that same playbook, running it in India. Now, India is also extremely competitive and Indian founders go very deep before they go across. And India also has these super apps. So it's not a walk in the park either, but you can IPO in India. And the Indian regulator would welcome that. So I think I'm with you on that one. Yeah.
The startup logic a few years ago was like, if you don't win in Indonesia, you don't have Southeast Asia, right? Because like population-wise, Indonesia is half of the region. And so I think that caused like a gold rush. Everyone's like, I got to get into Indonesia. I need to have like a foothold in Indonesia. And I think you're starting to see that, the sad part of the story play out, which is like too many people are in Indonesia. There's still not enough revenue to go around, and
not enough infrastructure.
Not enough infrastructure, and then the exit opportunities aren't there as well, especially as like the global investors have retreated.
Yeah, I think that's what's playing out.
Yeah, it's kind of sad, but it's really the local players that are making Indonesia work.
That's right.
Yeah,
that's right.
Yeah. Okay, that's all the time we have for today. Any final thoughts? We good?
Sam, it was great.
I want to do a poem next time. Invite me back with that task.
All right.
It was lovely to be here. Thank you for having me.
Yeah. Sam, Peter, Prashant, thanks for a great conversation. For listeners at home, you can give us your feedback or nominate topics at 6040podcast@techainasia.com, and we'll catch you in 2 weeks' time.